What's up, everyone? It's Tom Diesel here. I hope you guys had a great weekend. This week I want to kind of go over a few of my trades, that I took. Also kind of more like a trade recap on those, and also to answer, I think, one of the questions a lot of new members have been asking lately, or I've been receiving a lot of DMs regarding this issue, which is the liquidity. If the stock is liquid enough, liquid, illiquid, or whatever, or the volume for the low-hanging fruit. What is my criteria and on that. So and basically, more like a basic stuff regarding liquidity. So yeah, let's get onto it. I'll bring up the chart here. I took few trades. I'm not gonna go over trades I took from Monday to like Friday, so it just really doesn't make sense. You guys seen me posting a chart in main chat, so I'm just gonna go over the ones that I took on Friday. This is like more like a fresh ones that you guys can still remember the ticker. So the first one I'm gonna go over DD. This is like the total, non-niche for me, and I took this trade, near the open. I was thinking about 950 line, which is I think the pivot here as well. No, it's more like who in half dollar mark. I try. Okay, man, it's like putting on the wrong one. This one. Yeah, DD here. I'm trying to take out this into 950. I should have, probably the thesis is more valid if I took a near the red to green place here, 986, and once it reclaimed I should have stopped, right? But it really doesn't matter anyway, so if I took it here or here, I'm gonna get stopped out anyway, right? Because I completely forgot about the fact. Oh, it's like, once I took this trade and I realized that that wasn't my niche because of the market cap. Market cap was 60 billion. So this is more like a large cap company, and I shouldn't be trading this at all, right? I shouldn't be placing this trade. And the moment I got in, and then I asked myself, so what was my edge right here? And I immediately realized, okay, so this is like 60 billion company. This is not in my playbook. I shouldn't be trading this. The only time I would trade large caps or the big market cap company is on the first red day, and that's it, right? And this is more part of more like FOMO for me, popping back from almost like 9-10. I was thinking broken stocks, right? Likely it's gonna get to this line and then rejects. See pretty a big sell-off here throughout the day, more like low-hanging fruit to me. But I shouldn't take this trade at all. Yes, if you were patient enough for this line, 1030, also 1060 here, yeah, you could have banged, right? But I just don't want to kind of stress about it, and just want to show like this is like a really more like a FOMO. I got in, but I realized right after that I shouldn't be in this trade in the first place, so I took it off right away. Yeah, but as you can tell here, like 10,000, 20,000, right? So if you're trying to get at 3 and get out at 2.8 here, if you're using 100 shares, or like 500 shares, you're gonna get in and get out really with ease, no problem with that, right? But if you're using like 10,000, 50,000, 100,000 shares, yes, you're gonna have a problem, okay? Unless you're hiding size, or like you scaling on the way out, maybe on every like 1 cent you want to get out like 10,000 shares, or like 1,000, you're gonna split your orders into like 10 or 20 orders on each 1 cent, right? So, and I've been getting a lot of questions about liquidity from a lot of new members. I mean, so it's like you really need to ask yourself, I mean, is it really that important to you or not? Okay. Uh, I would say the only thing you should focus on is uh, the like the level two here, right? Like the liquidity, like if stock is liquid or not. I'm more like I care more about on those the the spread basically, right? So let's say Amazon. I mean, if you see a spread, this might not be example. You know, if you see a spread, something like uh, 3,000, 3,300 here and 3,400. So you down instantly, like $100, right? And if you slamming, the bid or the ass, you down like either way on that. So that is the spread that I worry about the most. So which is like you can tell if stock is liquid or illiquid, right? So if the spread is way too big, yes, the stock is illiquid, right? So not a lot of volume coming in, not a lot of people trading this one. So that's why you have a really wide spread between the bid and the ask, and which is really illiquid. And on something like NAOV, you can see here, this is like after hours now. But 244 and 246, just 2 cents, right? I would say this stock is liquid enough for you to get in and get out. Also, the spread is not that big. So if you are new members, or like if you are new to trading, this is what you need to look at: the spread between the bid and the ask, right? You don't want to be getting in something like, let's say, 1.94 and 294, right? So it's like a dollar spread. So if you short and you slamming here at 194 to get in, you down instantly $1 already. So whatever size you're using, 1,000 share. I mean, I don't think on something a wide spread like this is gonna fill you with that much, shares. Okay, usually on those illiquid stock, the wide spread, there's not really many volume at all. Maybe 50 or 100 or like 200, something like that. So to me, this is what I'm looking at the most. If it has a wide spread like this, illiquid stock, I don't want to be trading those. It's really hard for me to get in unless I'm using really fantasy order. And if it's widespread like this, likely there's not much volume to even begin with, right? But if you see this, like even on something like NAOV as a low-hanging fruit, or like on Acer,